Also, everyone, markets with those opening higher to start the day. More insight on early morning trading this morning comes from Michelle Snyder, partner and director of trading research and education for Market Gauge. Michelle, always a pleasure to speak with you here. So let's dive right in. Wall Street rebounding as COVID-19 fears, at least for the Omicron variant, they are starting to wane here. Yet the pace of inflation, it continues to be a concern. So what do you see as the major risks that the market is kind of pricing in and moving through perhaps right now too?
Well, last week it really seemed to be beyond Omicron and the Fed, a credibility issue. There was questions about the credibility of everything, really, from government to politicians to scientists to central banks. And it seemed that the credibility factor was I think, the biggest risk to the market. And yet, when asked or thought about what would actually be the most credible thing, the words that came to my mind were the retail investors, because I can see that they're evolving. And yes, what does that mean? It means that they might have taken a big hit, particularly in the cryptocurrencies over the last week, but their resolve to follow price and to learn and to continue to buy the dip is there. And that's kind of what we're seeing here, is that there's so much cash and there is so much willingness to buy sectors across the board that it's actually saving the market and superseding any possible credibility issues that we've seen emerge.
And so you mentioned the Fed. Many analysts are saying that the Fed's taper timeline is not in line with market conditions, given the rise of inflation and wage growth. I'd love to get your perspective on this, and which industries should investors be looking to perhaps hedge against?
Well, we're already long a bunch of commodities. We've been long sugar, we've been long wheat, and DBA as an exposure to the softs and general grains. We were long in the metals and silver in particular, but we had gotten out with a profit, so we're looking at that again. I still think that we're going to see an inflationary narrative in 2022. I don't see many changes actually in the labor issues or in the supply chain issues, or even just in the whole supply demand, particularly with things that grow that you can't just magically make appear again. And also considering that we have had a pullback globally in terms of demand with this latest scare of Omicron, once that comes back. So I still think that you have opportunities here to be looking at even some of the industrial metals. They've come off to great support levels, and they're still relatively undervalued compared to, say, NASDAQ, which broke down, but not by any great means. Certainly did not fail any major moving average. So I keep my eye on that, and I would keep my eye on the long bonds as well, because right now they've come back off and the yields are rising. You really want to see those continue to underperform the SPY in order for you to assess whether or not inflation is really going to be as scary as people think.
And so additionally here, we got to talk about the holiday season that we find ourselves within right now. FedEx forecasts this week will be among the busiest due to the rise in early shopping. So what's your outlook on retail spending and the concern over inventory issues, even as we move into the early moments of 2022?
Well, there's certainly been some retail areas that have held up again, even during this past correction, like Capri, for example, which is the Jimmy Choo Michael Kors. That actually never really broke down. And then some of the more staple type of investments like Costco's, Target, they've held up well. And I think consumer staples are something that we're going to see continue to outperform maybe even discretionary. But getting back to your point, we actually started a position at very low prices here in PayPal at this sort of buy now, pay later is a theme that has emerged. And also in terms of the consumers themselves, yes, I think that if the market holds up here, some of that confidence and sentiment will return to positive. People want to celebrate the holidays. They want to give. They want to have something really optimistic to sink their teeth into as we end a very tumultuous 2021.
Let's also talk about, I love that take, by the way. Let's also talk about chip makers have been, they've been on a tear this year, and now Intel says it may take its Mobileye self-driving car unit public next year. Your kind of perspective on the semiconductor industry and your outlook perhaps on the overall strength of the tech sector, if you will.
Well, again, semiconductors, if you just look at the overall sector ETF, SMH, as a representative of NVIDIA and Advanced Micro Devices and Micron, et cetera, all of which, by the way, are on the list of top stocks to perform with certain companies like Cowen, for example. They, let's face it, if the market holds up, they'll hold up. There was for a minute there a look like we were going to switch from growth to value. But the tech industry is here to stay, and obviously we have even managed to march forward with a chip shortage. And so what I like to look at with this now is not so much the typical companies we just mentioned, but this is where ARC comes into play, because Kathy Wood, as we know, has invested in a lot of these newer tech companies like Palantir and Fastly and Teladoc. And I think we have to keep our eyes on that, and that fund in particular, because that's really where I would like to see tech go, is into some of these newer, more exciting companies, and see how that emerges as we get into 2022. And not so much in the things that we know could go up, but by how much, with great risks in any direction.
Yeah, some of the themes in the ARC Innovation Fund: genomic revolution companies, automation transformation companies. We were just talking about this yesterday as well. Energy transformation companies and artificial intelligence companies even as well. With all of that in mind, which industries should investors avoid at this time, and where should investors be looking for growth potential?
Well, in terms of avoiding, as I said, I would certainly want to see what happens here with some of these really big cap companies as far as how much upside. I want to find the things that I think have the ability to make huge moves for 2022. And I'm focused in a lot of places, but the major focus really still is in clean energy. And that's because it is still the most underinvested sector as far as governments, corporations, institutional investors, and yet there's this vision of going carbon neutral by 2050. We really have to get cracking in terms of making huge investments in that space. So we're looking at PBW, for example, which is the ETF. TAN is another. Even some of the oil companies that are switching to more investment in carbon neutral, and the EVs. I think EVs are going to continue to be hot. I know Ford's gone crazy, but there's certainly a lot of companies out there that are still sort of sitting tight, and I think could have a big move higher for 2022.
Always a pleasure to get some of your insights in the morning. Michelle Schneider, who is the partner and director of trading research and education for Market Gauge, joining us this morning.